Hey everybody, Larry Berman here, and here's what's on my radar this week. Really excited to finally launch our ProI's series of indicators on the Berman's Call blog. So you can go to bermanscall.com and there's a link there on the front page and you can go have a look. So ProI stands for Probability Return on Investment Index. So PROII hyphenized eyes, as in we're having a look around. There's three aspects to the model. So the three things that we're going to talk about this week are equity valuations, business cycle risk, and the tactical nature of what's going on in the stock market. Volatility's picked up quite a bit. So on the valuation side, equity risk premium is the one area that Powell had talked about. Listen, bond yields are low, stocks are cheap. Well, as bond yields creep up, stocks now have to adjust to that new valuation. So that concept of the inverse of the PE, so the earnings yield of the S&P 500, discounted for what the yield is, free money, risk-free money, that factor is what's driving the expansion of multiples. So as bond yields are ticking up here, Powell doesn't care. We heard from a few other Fed governors this week, they don't care. The bond market is going to stress test the equity market in the next couple of months. Make no mistake about that. That's going to add to volatility. On the business cycle side, which is aspect 2 of our modeling, we look at credit spreads. Well, credit spreads are being artificially held together by the Fed. So when does the Fed say, okay, we're backing off of buying junk bonds? Like when does that actually happen? Because credit spreads right now tell us things are okay, but it's artificial. The other parts of the business model, the steepness of the yield curve, inflation expectations, all those things are still fairly well contained now. The tactical nature of the market, the ups and downs, put call ratios, all these, or not all of them, but many of these tactical factors right now are telling us we need to be concerned. We had a spike in volatility last week, but because the markets have come off their overbought condition from last week and the week before and are a little bit lower, some of these indicators are a little bit more moderate this week. Go have a look at it, bermanscall.com, have a look at the ProI series. We update it every week with detailed explanation of what each factor is looking at. It's a 20-factor model. Kind of acts a little bit like the CNN Fear and Greed Index, but a little bit more robust. When the risk factors are high, folks, you want to have less risk. When the risk factors are moderate or low, that's the time to be more aggressive with your portfolios. Last week, our bull and bear pick of the week was to go along equal weight S&P 500, RSP, and short against that, the market cap weighted. And that trade worked out very well last week. I think 2% was kind of the net difference between market cap and equal weight. There's more to go on that trade. As interest rates tick higher and the Fed doesn't care. At some point, the Fed starts to care. Yield curve control becomes part of the narrative. But I don't think that's going to come until we really stress test the Fed. So that is coming. We have to weigh that against what's happening with the stimulus and the reopening, which are positive factors. There's no doubt about it. But it's that large cap tech that was working when we were shut that's not going to work going forward. We got very overbought on the mining names, on the energy names. So if you're looking for a tactical trade short term, maybe you want to reverse that a little bit and be short energy and copper and those kind of names for a trade, but don't get married to it. Those are buy dips. The stuff we want to get out of a bit more are the ones that are the working. The ARK ETFs. Kathy Wood's fantastic. Love what she's done. But those are so overbought that there's much more downside risk to come as interest rates go up. And on the long side, be a little bit cautious now. So again, we like equal weight S&P 500 for now on the long side. Have a great week, everybody. Remember, follow us on our YouTube channel. Click the alerts so you know when we have new ideas out. Have a great week, everyone.